Welcome to this week's look at the state of the New York City real estate market. This is for the week of March 11th to the 17th. As always, I give you the full reports on what happened last week in the luxury market, the Manhattan market, and the Brooklyn market. Then I sum it all up, give you my thoughts and my advice for active buyers and sellers. There is a lot going on. A lot has changed since the end of last year, and there's a lot going on every day. So you're definitely going to want to stick around for that. As always, if you have any questions along the way, please post those below. You can always reach out to me directly at Sotheby's. Going to get started now with the luxury market, and we have some big news there. 40 contracts were signed last week in the luxury market. That is 12 more than the previous week. Wow. That is quite a significant increase. And actually, here's an interesting little factoid about the luxury market. 60 to 70% of those deals are all cash. And the luxury market is a bellwether for other parts of our market. The fact that the luxury market is going strong is a very good thing overall. And I do think portends well for our market. Period. Keep in mind, the luxury market is a reflection of the Manhattan market only. We don't track the luxury market in Brooklyn yet, but for those who are differentiating, it's probably helpful to know that this is for the Manhattan market only. 3 of those contracts, it should be noted, were at the trophy category level, meaning they were priced at $10 million and above. 30 of those were condos, 7 were co-ops, and 3 were townhouses. Uptown took the lead with 22 contracts signed, and 18 were signed downtown. The number one contract was 41 NS at 50 West 66th Street. It was asking $46,750,000. It is a 6,942 square foot condo. It is a combination of 2 units. It includes 5 bedrooms, 5.5 bathrooms, 14-foot ceilings, and Central Park views. It has a 56-foot great room that is flanked by 2 loges. Amenities include doorman, fitness center, indoor lap pool, an outdoor saltwater pool and jacuzzi, basketball and pickleball courts, screening room, game room, bike room, and my favorite, dog washing facility. The number 2 contract was 60 Bank Street, asking $11,500,000, reduced from $13,750,000 when it was listed back in April of 2022. 23 feet wide. This 4-story house has 4,350 square feet. It is currently configured as a duplex with 4 units on the upper floors. It has a south-facing garden and a roof deck. We're going to take a look now at the stats for the luxury market for last week. The total weekly asking price sales volume, $290,279,450. Average asking price, $7,256,986. Median asking price, $5,487,225. Average discount from original ask to last asking price, 11%. Average days on the market, 726. Okay, that is it for the luxury market. Wow, 40 contracts, amazing. This is the first time the luxury market has topped 30 contracts or more. So, wow, interesting. Now we're going to move on and take a look at what happened in Manhattan. The supply was up last week. 450 properties came on the market. That's up almost 6%. Contracts signed 238, up almost 18% for the week. 157 properties came off the market. That is up a little over 8%. The 1-month view shows us that the supply rose almost 33%, up 1,702. We really needed to see that supply rise. Contracts signed 900. That is up a little over 5%. And the off-market properties, 543, up 41%. If we look at the latest reading on the Market Pulse, we are down 175 for the month, down 205 and change from last year. You can see we are falling a bit, kind of drifting down. We're still in neutral territory. This is a reflection of this balance between the supply and the demand. With this uptick in supply, which is to be expected this time of year and certainly is much needed. We are seeing that the contract activity, which is not really quite keeping up, but still going, is just not keeping up quite as much. So we're seeing it's a little bit of a pullback in terms of the market pulse. The liquidity pace at 900 is this 30-day moving window of contract activity. And we see that this is kind of hovering in this neutral liquidity. This is good news for the sellers. Certainly, this is not terrible news for the buyers. We're just kind of back in this balanced state. I'm going to share something I don't usually talk about. We talk once in a while about the rental market because not everybody is a buyer or a seller. And certainly the rental market is a very big part of our market here. We're starting to see that the rental market is picking up. The firming prices and the increased leasing activity is suggesting that this could be a bit of a tough market for renters this summer. And definitely, if I were going to advise someone looking to rent, and they probably should be trying to get out in front of this market. Don't look too far into the summer. You'll have a lot more competition. And again, any questions about any of this, you can just post them below or reach out to me directly. As Sotheby's, I'm always happy to talk to you about any of these things because every situation is unique. And so you may have a unique question that you want to ask me. Okay, we're going to take a look now at what's going on in Brooklyn, and then we're going to wrap it all up, and I'm going to give you my thoughts and my takeaways and my advice to buyers and sellers. We saw a little bit of an uptick for the week's supply in Brooklyn, up almost 4%, 227. We saw a little decline in contract activity in Brooklyn for the week, 134, down almost 7%, and a little tiny bump in the off-market properties, 62, up 1.6%. The 1 month look for supply, 820, that is up 15%. Contract signed, 542, up 9.5%. Off-market, up 22.5%, 250. Market pulse, down 2.6% for the month, up 21% from last year. We see that we're kind of hovering in this buyer's market territory. Again, this is a reflection of supply and demand balance. Is this really in buyer's market territory? Possibly not so much, because it's really just that we don't have a whole lot of inventory in Brooklyn. I don't know that buyers would necessarily report that they are seeing a lot of negotiability or a lot of, let's call it a lot of leverage in Brooklyn. Most buyers are reporting, to me anyway, that they are having trouble finding things that they want to buy in Brooklyn. And then when they do, they feel like they're quickly being snatched up. So I think this market pulse could be just a reflection of that balance being a little bit off. If we take a look at the liquidity pace chart, 542, the 30-day moving window, 542, we see that kind of looks like we're in this neutral place in terms of the contract signed. Definitely good to see that the contract activity is picking up in Brooklyn and overall seeing more signs of life and a more active market. We're going to have to continue to keep an eye on what's going on across the board in Brooklyn. These charts are helpful. The data that we have, such as it is, because it isn't fully current, we're always a little bit behind. This is helpful, I think, does not tell the full story. So, I think it's good to kind of keep an eye on this every week, which is why I do this every week and share this data with you every week as much as I have, because when you keep an eye on it, it continues to give you as much of a full picture as is available. And I do think that that is helpful if you are active in this market, whether you're a buyer or seller. Just as we looked at the Manhattan rental market, we're also taking a look at Brooklyn, and we're also seeing that we're a big uptick in the lease activity in Brooklyn. We're going to be seeing probably, it looks like even a little more kind of a firming of this activity in the Brooklyn rental market ahead of season. So if you want to be a renter in Brooklyn, you definitely want to be getting out ahead of this as much as possible. Don't wait too long. It looks like probably a lot of people are just staying put. So there may not be a lot of inventories, could keep that market pretty tight. All right, that's it for Brooklyn. I'm going to move on now, give you my thoughts and my recommendations for buyers and sellers. Any questions, let me know. So we saw a big showing in the luxury market, 40 contracts signed at $4 million and above, 3 of those being in the trophy property. We saw the lion's share in the condo sector. We saw the lion's share uptown, and we're seeing that 60 to 70% of all deals in the luxury market are all cash. What we're seeing in Manhattan and Brooklyn, we're seeing kind of similar and yet slightly different stories in the Manhattan and Brooklyn markets. Last week, we saw that the supply in Manhattan and Brooklyn, each of those saw the supply up for the week. In Manhattan, up 6%. In Brooklyn, up 4%. In terms of contracts signed, we saw Manhattan was up 18% for the week, whereas in Brooklyn, we saw that the contract activity was down 7%. Now, a week does not a trend make, but we are seeing what I would say is a fair amount of volatility in this market. What we're seeing is that more inventory came on the market in both Manhattan and Brooklyn last week, and we are seeing that in Manhattan, we saw a real pop in the contract activity for the last week, whereas in Brooklyn, we saw a bit of a retreat on the part of the buyers. This may be tied to a certain extent with the interest rates, the mortgage interest rates. It may be tied to a certain extent to what's going on with the feds. We don't really know what factors are playing a role in all of this, but as the season progresses, we will likely have better understanding. As we have more information, we'll likely have a better understanding of what the factors are that are contributing to this volatility, if we can call it that. Again, this is 1 week, so we'll see whether it continues. The luxury market is interesting, though, because it definitely is helpful to have this kind of activity going on in that sector, and we can hope that it will have some effect on the rest of the market. It often does. The hope is that it will continue to for the rest of the spring market. And, yes, and I did mention the rental market. So renters, if you are thinking about renting something, the sooner the better. Don't expect a lot of leverage. Don't expect a lot of negotiability. Definitely expect to have to be quick on your feet. If you see something you like, be ready to go. So have your ducks in a row. So what does all this mean? Sellers, we are in a kind of neutral market. Be realistic about your asking price. Do not be too ambitious. Don't forget, we are coming off of a down market. The indicators with the data would suggest that we are beginning to kind of come out of that a bit, but we don't have a lot of data, and we definitely are not. It's not that far behind us. Price action does appear to be on an okay footing, but we're still quite close to those times. So don't be too ambitious, because the buyers will not understand what you are doing and they will not bite. The asking price is not the selling price. The selling price is different than the asking price. So the asking price is a strategy. Be sure you are realistic and in alignment with the market. Do expect to see more inventory coming on the market. It already is. So that means competition for you. And when you have competition, you have to be sure you're positioning yourself as best in class, if at all possible. Buyers, it looks like the bottom is in. So what does that mean? When I say that, it means I would be careful about waiting for prices to keep falling, because there aren't any real indicators to suggest that they will. Again, the data that is coming in suggests that we kind of hit the bottom of our market last October, November. Data that is showing up now as we head into the end of this first quarter suggests that the prices are starting to rebound a little bit. So don't wait around for things to keep falling, because the market may just keep climbing and you will be waiting around for nothing. The inventory is definitely increasing, so that's good news for you. If you don't see something you like, stick around. You may find something coming along your way that you do like. And be aware that buyers, you too may have a little more competition. Your buy side, meaning when you go to open houses, you may see other folks there. When you make offers, there may be other offers in as well, including yours. So, just don't freak out. Just be aware that there are other people who are looking as well. And, the market is shifting a little bit now. So we're back to this kind of more neutral and balanced market. And that means that there's a little more, nobody really has all the leverage anymore. Okay, that is it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work that they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.